Ladies and gentlemen, welcome back to the channel. My name is Juliuz and I'm watching the best videos of the trading industry with you together, so you don't have to do it all by yourself. Today, we are watching a new video from our friend Brando Trades, how to get good at trading as fast as humanly possible. Okay, I think this is like the most basic trading video and the fundamental thing we all want to achieve to get as good as fast as possible. So I have to watch it and hopefully I have some interesting takes on this. We get right into it. You guys leave a like and a sub real quick down below. It's just 5 seconds of work for you, but it means a lot to me. Thank you for your support. Let's get right into it. Here we go.
The fastest way to get good at trading is to stop trying to get good fast. I know how that sounds, so let me explain. I did it the slow way for years, chasing secret indicators and other people's picks, and most of that time was wasted on things that never mattered.
So indicators, first of all, there is no indicator that you can blindly follow and make big money in the markets. I mean, otherwise the big hedge funds would just use that indicator and eventually it will stop working.
Speed just means refusing to waste years on the wrong things.
The markets in itself are efficient. That means an indicator will probably work exactly 50% of the time. Okay, so that it is efficient.
People who get good the fastest aren't chasing shortcuts. They compress the boring process. And
this 50% of the time can also be seen across a very big time period. Okay, for example, an indicator works good in a year, but in the next year it works really, really bad. Okay, so the 50% is like an equalization over time.
I'm about to say is me telling you what to do with your money. This is just how I think about learning the craft. Let me show you the 8 things that actually accelerate how fast you get good at this. Number 1, get the target right. Here's the reason most traders feel stuck after years of trying. They've been practicing the wrong thing. When you start out in this game, the goal feels obvious. You want to be right, you want to call the move, predict the direction, and nail the entry at the exact low and
that's pretty true.
Exit at the exact high. So that's what you practice. You spend hours trying to get better at predicting, reading every piece of analysis.
Okay, first of all, let's go back here. I have already too much to say here. In a scenario like this, we never know in which direction the market is going, okay? But first of all, a lot of traders are trying to buy. At the first look, right, since we are at the support, you can eventually try a long trade here. But keep in mind that we are currently trading lower. So you could also find enough arguments to put in a short position right here. Okay, so eventually you can find good arguments for each direction. It's not that easy as predicting the move.
Direction and nail the entry at the exact low and exit at the exact high. So that's what you practice. You spend hours trying to get better at predicting, reading every piece of analysis, watching every indicator, building a read on what's going to happen next. And here's the problem with that. Predicting the next move is not a skill you can build. Nobody knows what the next candle does. Not me, not the best traders in the world. Nobody. The actual skill,
the only thing that we can influence is that we can say there is a slightly bigger chance that momentum will continue in the direction it is already going. Okay, the chances are smaller that you get right in at the turning point rather than that the momentum is continuing a little bit more into the momentum direction. Okay, that is the only thing we can influence.
That separates traders who last from traders who blow up is executing a repeatable process, the defined edge. A level you trust, a reason to enter, defined risk, and defined exit. Repeated consistently enough that over a large sample of trades, the edge shows up. That's what you're getting good at, not a prediction. Execution of a process. The moment you aim your practice at the right target, every hour of screen time starts compounding in a direction that actually matters. Before that moment, you're just spinning. I spent years trying to get better at being right, calling tops and bottoms, predicting the direction. I practiced it constantly and I never got meaningfully better at it because it isn't a skill you can build. The market proved that to me over and over. I just wasn't listening. That shift happened when I stopped asking, what's the market going to do? And started asking, what does the chart have to do for me to take this trade? That change alone probably saved me 2 or 3 years of spinning. Because once your practice is aimed at executing a repeatable process, level, reason, risk, exit, every rep you put in actually compounds into something.
That is true. Eventually, all of those problems are obsolete if you are backtesting or developing and backtesting a good strategy that you always follow. And then the rules are defined. You just have to abide by them and work off your checklist and you're gonna make money over the long term.
Work starts building on itself instead of resetting every time you're wrong. Number 2, go deep on one setup. The single biggest time sink I see across this entire industry is traders who never stop moving. New strategy every 2 weeks, new indicator every month.
So true, guys, so true. This is why I argue you should develop your own strategy. You can get inspired by others, but eventually you have to develop your own strategy that fits you best and then just stick to that. If your backtest says that the strategy is profitable, and there are many things that can be profitable if you keep it very simple, then just stick to that. So Brando is right here.
New approach every time the current one has a losing stretch. Here's what that actually looks like in real time. You find something that makes sense, you run it for 3 weeks, you hit a losing streak, which is completely normal for any strategy over a short sample, and you decide it's broken, so you scrap it and start over, and the clock resets to 0. You just did 3 weeks of real reps and threw it all away before the data was even worth reading. Do that 6 times a year, and you've had a year of trading with 0 accumulated learning. Year 1 repeated 6 times.
Yeah, why do people do that? Because they did not backtest the strategy enough. They do not have enough confidence in the strategy. Or maybe their approach is just not good enough. Okay, maybe they think they can do better by just doing something different now. Okay, this is not good enough. I found something, it's profitable, but too little. I want more. Okay, they're greedy. And that is the point. Okay, don't be greedy. Find something that works and stick to that. And then you should have, in theory, the confidence that what you're doing is right.
Is where the edge lies, and depth is faster than variety because you stop resetting the clock every time something gets uncomfortable. Pick one setup, built off a level you understand, support, resistance, and context on the higher time frame. Run it until you know it well enough to explain exactly why it works, when it works, and exactly why it fails and when it fails. That understanding is the edge. You cannot shortcut your way to it. The setup I tell any serious beginner to go deep on first is a support reclaim. Price pulls back to a level that has proven itself on the daily or weekly. Test it and shows you buying volume coming in. A close back above that level
on a daily or weekly
or strong rejection candle at it, then you enter on the reclaim with a stop below that level and a target at the next resistance above. That is one setup, because when you run it enough times to understand it,
yeah, why don't you, if you are searching for a strategy, why don't you try some support resistance stuff? Okay, backtest something, let's say in a 15-minute chart or in a 1-hour chart. If a support is reached, you enter long. Okay, for example, you set a specific stop loss and then you calculate, okay, is that on itself profitable? If not, okay, how does the support level has to look like in order for you to get in? Okay, then you build around a simple rule, many different complex entry rules, and that is developing your strategy.
Exactly why it works, when it works, and exactly why it fails when it fails. The level was wrong, the context was against you, the volume told you something you ignored. You have a real edge. Not because the setup is magic, because you understand it well enough to filter the good ones from the bad ones. That understanding only comes from depth, and depth only comes from commitment to one thing long enough. Number 3, build a feedback loop. I'm gonna say something that sounds obvious and almost nobody actually does. Without a record of what you're doing and why, you cannot improve. Not slowly, not at all. Here's why. Without a record, every week feels like a fresh start. You make a mistake on Monday, forget about it by Friday, and make the same mistake again 2 weeks later. Then again a month after that.
Again, I can already repeat myself. If you have fixed rules, a fixed strategy that you have to follow, you can't make any mistakes besides not holding onto your rules. That's the only mistake you can make.
10 years of trading that way is year 1 repeated 10 times.
And it takes so much pressure off you. If a trade isn't working because you lost in the end, but you held on to your rules and you didn't do something wrong, then there was no mistake. That just was a losing trade.
Watched it happen. The feedback loop changes all of that. It's a mechanism that turns time into actual improvement. What's a log? The setup, the level you were trading, your reason for entering, where you sized and why, where you exited, planned or unplanned, and critically, how you felt going in. Confident, hesitant, frustrated, or forcing it. What to do with it. Review it weekly. Not to beat yourself up, define the pattern. Where is your edge actually showing up, and where are you consistently leaking? The answers are in the data, and most traders never look at the data. You can fix it in weeks what would take years to fix without a feedback loop, because the loop shows you exactly where the problem is instead of making you guess. What I track, the level I was using, the reason I entered, the size I took and why, where I plan to exit before I entered, where I actually exited, and what.
Again, my opinion differs a little bit here. Of course, you can just trade whatever you see and then track what you did and eventually find out something that is working. But I would do the other way around, actually. I would start before I even put in a trade, just by searching for a strategy that is working with historic data. Search for something that is working and then start executing. And then you do not need to track or have your little journal in which you track your emotion stuff. Forget about that, guys. I don't want to do that. Maybe you want to do it. I don't want to do that. I want to have a fixed system that is working. I know, okay, the trades that look like this, I have to take them in this manner. And that's all I do. And there are no mistakes if I play by the rules. And then I do not have to track my emotions whatsoever.
Whether I followed my process or deviated from it. That last one matters more than the P&L line. The leak the journal exposed for me was that I was consistently right about the direction, but consistently wrong about the timing. I was entering too early, before the level had actually confirmed.
Yeah, sometimes that's not the problem. If you are entering too early, then you might just need a bigger stop loss. At some occasions you have to enter that early because the trade is running away from you, so it's not that easy, okay? If you look at this example, this was the resistance here. He entered a short trade and the resistance got stopped out, but eventually
because I was afraid to miss the move. The loss
turned into his direction, so maybe you need a reward risk ratio below 1. Twice as much risk as reward. That sounds completely crazy, but if the win rate is big enough, then this works perfectly fine and you get big buffer for all of the market noise, and eventually the trade turns in the direction you anticipated. Okay, maybe think about that. Try it out, test it. If it's working, good. If not, do something different.
losses weren't random, they had a pattern. The journal showed me the pattern in about 3 weeks of review. Without it, I probably would have kept chalking those losses up to bad luck for another year. They weren't bad luck, they were specific and fixable habit. The journal is the only reason I found it. Number 4, survive the curve. This one is going to sound like basic risk management advice. It's not, it's a speed tool. Here's what kills most traders' development before it even has a chance to happen. They go too big too early because they think the stakes will make them learn faster, and they blow up the account before they've had.
If you watch a lot of my videos, I always tell you the same. The holy grail is a small position size. The holy grail is a small position size. So you are not risking too much. So you can have several trades that go against you, which is part of the game, especially with mechanical strategies. And only, I don't know, 10 or 15% of your account is gone after a very big drawdown phase. Okay, that is good for your mind. That's good for your mental health. So you don't scrap the strategy immediately after 3 trades, because at the 5th your account would be gone. Okay, this is not how it works. Backtest something, build up the confidence, and then trade a decent size. Probably a lot smaller than you are trading right now. Okay, risk 0.5 to a maximum, really maximum of 1%. Stay below 1%. That's decent.
Had enough reps to build anything. Every time you blow up and start over, you don't just lose the money, you lose every rep you've accumulated, every pattern you were starting to recognize, and every lesson you were in the middle of learning. You reset the clock to 0 again. The fastest learners keep their risks small on purpose, because staying in the game is what lets the reps add up and compound into real skill. The goal in the early stages is not profit. The goal is reps and feedback. You want to make as many decisions as possible while keeping the cost of being wrong at a level you can absorb and keep going. Small risk means a normal losing streak doesn't end your run. It means you get to keep learning. The honest version of this: trading always carries real risk. Losing streaks happen to everyone. You can lose money. Small size doesn't change that. What it does is make sure one bad stretch doesn't wipe out everything you built before you've had a chance to build it. When I was building the skill, my personal life was simple. I would not put on any size that changed how I thought about the trade. The moment I caught myself hoping a trade would work instead of executing a plan around it, that was my signal that I was too big. I'm not a financial advisor.
Maybe I'm again different than Brando here. I always hope that the trade is working. I'm not this unemotional robot, okay? I always am fearful that the trade is going against me, even if I just risk demo money. I'm built like that, okay? Even if I'm trading on the demo, of course, I want my strategy to work out now. The strategy that I built, that I think is the best thing for me, that I created. Of course, I want it to work, even if it's just demo money. And I'm fearful if it's going against me. That is our human psychology, okay? I'm not like this autistic person who has no emotions. That's not me, okay? But I have the confidence from my back test over years and my forward testing. I have the confidence. I know I have to do that, and I'm trading a decent size.
This is just how I think about it for myself. The practical test. The trade goes against you right after you enter. Can you manage it with a clear head? Can you evaluate the chart objectively and make a rational decision? Or does the dollar amount make you emotional before you can even think straight? If it's the second one, cut the size until it's the first one. The goal
very true.
in the learning phase is reps and feedback, not profit. You cannot get reps and feedback if you blow up the account before you've accumulated either. 5, get around people who already do it. There's a version of learning this where you figure out everything yourself, trial and error, solo, until something clicks. I know exactly what that version cost because I lived it. Every mistake you make alone is a lesson you pay full price for, in time, in money, in confidence. And here's what stings about it. Most of those mistakes have already been made by someone else. The lesson already exists. You just don't know where to look because you're doing it alone. The fastest way to skip it is to get around people who already trade a real process and borrow the map instead of drawing it from scratch. And I want to be specific about what that actually means. You're not copying trades, you're copying the thinking. Watch how an experienced trader walks through a setup, the level they're using, the context they're zooming out.
That's true. Probably he's thinking about some online Discord group. I'm thinking about real people, friends. That would be the best case scenario, and I do not have that. Is that you have a group of friends and you all trade the same setup, the same strategy. Maybe you develop this strategy together and you all trade that, like the turtle traders, for example, okay? That would be the best case scenario. I do not have that. I wish I had that. The question is if I want to give now several people my hard work strategy for free. Maybe really, really good friends, but they're mostly not that into trading. And other people, I'm not sure if I want to give them my strategy for free that I work pretty hard on. My closest friends are not that into trading, so I do not have this very, very close group of traders around me. But that is a really good tip. If you have close friends, try to develop a strategy together, execute it together, push yourselves to stick to the rules, to build up the confidence, and then everything will turn out okay.
The check, the question they ask before they size, the exit they have in mind before they enter. That thinking is what took them years to develop, and you can absorb it in months if you're paying attention to the right things. When I started getting around people who are already trading a real process, the thing that I absorbed fastest wasn't a specific setup or a specific level. It was how they thought through a trade before they put it on. The questions they asked: what does the weekly look like? Where's the nearest significant level? What does price have to do for me to be wrong? What's my target, and is the risk reward actually there? That thinking, that internal checklist, is what takes years to build when you're grinding solo. When you can watch someone who's already built it through a trade in real time, you absorb years of their mistakes through a conversation. Not because they're handing you the answer, because you're seeing the decision-making framework from the inside. That's the thing you can't get from a course or a book. You get it by watching how someone who actually does it thinks. Number 6, kill the emotional loops. Here's something most traders won't admit. They know the rules, they read the books, taken the courses, built the watch list.
What were those
Here's
books?
something most
I'm interested in books, guys, as you maybe can tell.
traders won't admit. They know the rules, they read the books.
Did I actually read any book of that? I mean, it's a basic how to day trade for a living. Isn't every second book called like that? I have a book called How I Trade for a Living. It's not the same. All right, okay. I heard of most of them. I'm not trading stocks, so I don't need that. Stock Market Wizards. Okay, I have a lot of Market Wizard books. Intelligent Investor. I'm not investing. How to day trade. Ross Cameron. Oh, this might be good. Big fan of Ross. Reacted on several videos.
Taken the courses, built the watch list, done the prep. And then real money goes on the line, and every rule they know gets overridden by something that has nothing to do with the chart. Fear of missing out pushes them into a trade they had no plan for. Revenge pulls them back into the market after a loss with double the size. Greed keeps them in a winner long past where they said they'd exit until it reverses and they give it all back. And the worst part, it's not random. It's the same loop over and over until they address it. Most stalled traders aren't stuck because of a strategy problem. They're stuck.
If you are somehow in a losing loop in which you are not trading by the rules that you set previously, not trading your strategy, but trade whatever you're doing, and you cannot get yourself to stick to the rules, that might happen. That happened to me as well several times. You have to take time off, get away from the markets for some weeks, a month. Yeah, maybe a month is like good times, man. Get away from the market for a month. Backtest a strategy you developed more and more. So build up more confidence. Confidence is the only thing that is important here. And then get back to the market with real confidence that only this strategy will lead to the success you want. And then trade it with decent size. Again, get right back into it. Okay? That is my recommendation.
Because the same emotional loops keep undoing months of progress in an afternoon. You don't fix this by trying to feel calmer at the moment. You fix it by building the rules that don't depend on you being calm in the moment. Decide your entries before the market opens. Decide your exits and your stops before you're in the trade. Write it down and commit to it. Name your worst loop, whether that's revenge trading.
This might not be a possibility for everybody, okay? So you might not be able to write down on a piece of paper where you want to enter, where you want to exit. It depends on the strategy. I'm more or less, you can call it a scalper. I'm into a trade for maybe 2 to 3 minutes until it really unfolds. And I cannot tell you before where I have to enter. Okay, the market is developing over the day, and then my setups get obvious and visible.
Big on a sure thing, and design it out of your process before it gets a chance to show up again. In 2022, I had a period where I was buying the dip on SPX because I was convinced the bottom had to be in. Every time it pulled back, I thought it was the last leg before the recovery. I sized up because I was certain. I was not reacting to what the price was doing. I was trading my opinion.
Yeah, and rule of thumb for developing your own strategy: never buy a falling market, never sell a rising market, and you're good to go, okay? Sell a falling market and buy a rising market, and you immediately are better off.
And that cost me over $1 million in capital over the course.
Wow, okay, Brando is playing numbers here.
Of one trade. There was a pattern I kept repeating because I never stopped to ask whether my conviction was actually supported by what the chart was telling me. The reset routine I built from that. Before I enter anything now, I write down in one sentence what price has to do for me to be wrong, not what I think will happen. What has to happen for my thesis to be invalidated? When I can answer that question with a specific price level, I'm reacting to the chart. When I can't, I'm trading my opinion. That one question has stopped more bad trades than any other rule I have. Number 7, stop looking for the fast way. I want to talk about the thing that kept me slow the longest, and I think it's the thing keeping most people watching this slow right now. The search for the shortcut. Every hour I spent looking for the indicator that was going to change everything was an hour I wasn't getting my reps on my actual process. Every week I spent watching someone else's trade alerts was a week I wasn't developing my own read. Every new strategy I chased when my current one hit.
Don't chase a strategy, guys. Open a chart, preferably in the bigger time frame. Do not go lower than 5 minutes. There are some great scalping opportunities in a 1 minute. For the people who watch until this point, I will show you something. Okay, we are in trading view on a 1 minute chart. Real quick, if you want to start looking for a setup, this is something I noticed. Usually, if a candle goes against the previous one, so in this example, green candle, red candle, and the red candle prints below previous, in this case, green candle, then the chances are very, very, very high that at least the body length of the previous candle will be printed lower at some point. Okay, this one did not break the low here. This one did, and immediately printed the body length as well. This is the best case scenario. Here we had to wait for the next candle, and this was probably still a losing trade because we got this big upwards candle, but this was also news stuff, etc. So do not look for news. And of course it works best after the market is open, okay, with bigger volatility. Again, here good examples. If the candle is closing different than the previous one and the bottom is broken, then the chances are very, very high that at least the body length will be printed as well. Same here, okay. This also, of course, works the other way around. Red candle, green candle, moves above the red candle, body length will be printed higher. Okay, that is just start at this point. This is just something I noticed recently. Maybe you can find it's in 1 minute, preferably. You can also try it in the 5 minute, 15 minute, maybe it's working as well. And yeah, build a strategy around that. Of course, there is way more that is needed for a working strategy. Stop loss, take profits. When do you enter? Where do you exit? Stuff like that. But maybe try to analyze that. This is something I noticed. So if you want to start somewhere, you can start with that.
A rough patch was a fresh reset to zero. The search for fast is exactly what keeps people slow. That's not a paradox. That's just how it works. There's no version of getting good at this that skips the reps. The people who accept and commit to the process are the ones who actually compress the timeline. Stop opening new tabs. Stop buying the next course before you finish applying what the last one taught you. Stop scrapping the process the first time it gets hard. Boring commitment to one thing done well is the only shortcut that exists in this game. The shortcut most people chase the longest is other people's trade alerts. They wanted someone just to tell them what to buy, when to buy it.
But do really a lot of people want the trade alerts? Because I do not want that. I want to be able to trade myself.
And when to get out. And there's periods of time where these people, they follow the trade alerts religiously, just copying the trades without understanding the reason behind the trade. And at the time it feels productive because they're making money. But when the trade turns against them, they immediately ignore it and just move on to the next one. And this costs you more than just money. It costs you your time and it costs you your ability to get better. By doing this, you don't build anything. You're not developing a strategy on your own. And the day
that's what I'm saying,
that you finally stop looking for the shortcut and commit to understanding why a trade should work.
It doesn't take a lot of time, guys. If you really sit down for a whole week, 5 hours a day, trying to search for a new good working setup, you will find one. Trust me, you will find one. And then backtest that.
Work or shouldn't, that's when you get better. Number 8.
It only takes a week, guys. And then you have a new setup.
8, repeat all of it. Let me tell you the fact.
That's gonna be profitable.
Fastest way to get good at trading. And I mean that literally. Get the target right. Aim at executing a process, not predicting the move. Go deep on one setup until you understand it well enough to explain exactly why it works and exactly why it fails. Build a feedback loop. Log what you're doing. Review it honestly. And let the data tell you where the edge is and where you're leaking. Survive the curve. Keep your risk small enough that a normal losing streak doesn't reset the clock on everything you've built. Get around people who already do it. Borrow the map instead of drawing it from scratch. Kill the emotional loops. Build rules that don't depend on you keeping calm in the moment, because in the moment you won't always be. Stop looking for the fast way.
This is a really good video. Okay, so I think we got what he wanted to tell us here. 8 very, very good rules. Everything is right, Brando says, but I think it can be done simpler. If you just develop a good strategy, build the confidence, and then stick to the rules, and everything will work out. Thank you guys for watching. Hopefully you could learn something, and you can write down in the comments what you think about this 1 minute thing. Again, I did not test it too much. This was just something that I noticed. If you are able to build a profitable strategy around that, leave me a comment down below and let me know. Thank you for watching. We're gonna see us next time. Have a great rest of the day and good luck with trading this week. Stick to your rules. Bye bye.